Good morning and welcome to TOI Japan Market Radio, broadcasting from Tokyo on January 29, 2026. I'm your host, and this is your daily briefing designed specifically for global investors tracking Japanese markets. Today we're going to walk through yesterday's session, some significant market moves, and what they mean for portfolios with Japan exposure. Joining me as always is our portfolio manager who focuses on Japanese equities and macro. Let's start with the session summary. How did Japanese markets close?
Thanks for having me. So yesterday we saw a relatively quiet session on the surface, but with some interesting breadth beneath the headline numbers. The Nikkei 225 finished at 53,375.602, up just 0.032%, essentially flat. The Topix performed a bit better, closing at 3719.0. up 0.297%. The Mothers Index, which tracks smaller growth names, added 0.226% to close at 2216.0. And notably, the J-Right Index showed some strength, rising 1.346% to 2033.5. On the currency side, dollar-yen finished at 153.242, up 0.518%, so we saw some yen weakness continuing. Commodities were mixed, with gold in yen terms up a substantial 6.371% to 20,285.0, while crude oil rose 2.405% to 64.73.
That's quite a move in gold when measured in yen. Before we dig into that, let's turn to the main story that's been driving sentiment globally. We saw headlines overnight about U.S. technology megacaps stepping up their artificial intelligence spending plans, and that drove broad equity market gains in the States. Bloomberg's Markets Wrap highlighted this as the key theme. How should Japan-focused investors be thinking about this development?
This is actually quite significant for Japanese equity markets, even though the headline is about U.S. companies. What happened is that several of the major American technology firms announced increased capital expenditure commitments specifically for AI infrastructure and development. This drove a rally in global tech stocks because investors see it as validation that these companies can monetize AI investments and maintain competitive positioning. For Japan, this matters enormously because the Japanese economy and equity market are highly export dependent, particularly in technology-related sectors.
So you're seeing this as a demand signal for Japanese suppliers?
Exactly. When U.S. tech giants accelerate AI spending, that translates into robust global demand for semiconductors, manufacturing equipment, and various components, sectors where Japanese companies have very significant exposure. Think about Sony and imaging sensors, Japanese semiconductor equipment makers, the supply chains that feed into companies like ASML, and even the precision machinery manufacturers. These AI build-outs require massive amounts of physical infrastructure, servers, chips, cooling systems, all of which create demand for Japanese capital equipment and component makers. Additionally, companies like Toyota are increasingly integrating AI into their manufacturing and autonomous vehicle development, so there's a domestic spillover as well.
And what about the market impact beyond just the technology sector? How does this flow through to the broader indices and the yen?
On the equity side, this is clearly positive for the Nikkei and Topix, particularly for the technology, semiconductor, and machinery subsectors. Japanese chipmakers and equipment suppliers directly benefit from these global capex cycles. We'd expect to see tailwinds for electronics and industrial stocks as well. On the currency side, this kind of risk on sentiment from global tech strength typically puts pressure on the yen because investors rotate into higher-yielding assets and away from safe havens. A weaker yen, as we're already seeing with dollar-yen above 153, actually supports Japanese exporters' competitive positioning, so there's a double benefit there. For JGB yields, we might see modest upward pressure if global risk appetite strengthens and capital rotates away from defensive bonds. Though of course the BOJ's policy stance remains the primary driver of Japanese yields.
Staying with the theme of corporate confidence and capital spending, there was also interesting news out of Switzerland. ABB, the major industrial automation and robotics company, expressed confidence in their 2026 outlook. They noted that customers are willing to plan capital investments despite ongoing political uncertainty. Why does a Swiss engineering firm's outlook matter for Japan watchers?
AB is actually a very important indicator for Japanese industrial health. They're a major supplier of industrial automation, robotics, and power infrastructure equipment to Japanese manufacturers. Japan's industrial sector, particularly automotive, electronics, and heavy machinery producers, relies significantly on ABB's technology and competes in similar markets. When AB says their customers are confident enough to plan capital investments despite macro headwinds, that's a signal that Japanese corporates are likely proceeding with strategic spending decisions as well. This suggests that despite domestic political volatility in Japan and broader geopolitical tensions, the industrial base is planning for growth.
So this is another capex story, but coming from a different angle?
Precisely. And the implications for Japanese markets are quite similar. On the equity side, this is likely positive for Japanese industrial and machinery stocks, particularly manufacturers of automation components, semiconductors, and capital equipment that either supply or compete with AB-dependent sectors. The electronics and automotive subsectors could see modest tailwinds if this confidence translates into actual domestic Japanese corporate investment plans. For the yen, the impact is minimal and indirect, though broader corporate confidence could modestly support risk appetite, potentially weakening the yen against major currencies if it reduces safe haven demand. On the JGB side, if ABB's confidence signals stronger capex cycles both globally and in Japan, that could create slight upward pressure on yields, particularly the 10-year, though as I mentioned, BOJ policy is still the dominant factor.
Meanwhile, in corporate news, let's talk about what happened domestically in the Japanese market. The Nikkei 225 edged up just 0.05%, but there was an interesting story beneath that headline number. Markets Mojo reported that 722 stocks actually advanced during the session, and Capcom, the gaming company, soared 9.82%. What's your read on that kind of market action?
This is a great example of why you can't just look at the headline index number. A 0.05% gain on the Nikkei sounds like nothing happened, but 722 advancing stocks tells you there was actually quite broad buying interest across the market. That's much healthier market structure than if the index had risen on just a handful of large cap names. It indicates diffuse participation rather than narrow leadership. As for Capcom's rally, that's particularly notable because it reflects continued investor appetite for Japan's high-value gaming and intellectual property businesses.
Gaming and entertainment have been strong export sectors for Japan. Is this move significant beyond just Capcom as a single stock?
It could be. The gaming sector is a key driver of Japan's technology and creative industries, and these companies generate substantial foreign revenue. A move of nearly 10% in a single session for a company like Capcom suggests there was either company-specific news, earnings expectations being revised upward, or broader sector enthusiasm. It points to selective strength in both domestically focused equities and export-oriented tech names. From a market impact perspective, the broad advance of 722 stocks supports the idea that we have healthier market structure than the 0.05% headline suggests. However, that tiny index gain also tells us we're in a consolidation phase. Further momentum likely depends on either earnings revisions or new macro catalysts.
And what about the currency and bond implications from this session?
For the yen, there are no direct implications from this particular session's equity data. That said, broad equity strength generally provides marginal support for risk on sentiment, which would mean yen weakness, and we did see dollar-yen up about 0.5%. For JGB yields, I'd expect minimal impact from this equity session because what we're seeing is sectoral rotation in stock-specific moves rather than significant macroeconomic signals that would drive bond markets. Capcom rally could signal broader gaming and tech momentum developing, or it could remain an isolated move, so that's something to watch over the next few sessions.
Let's pull this all together for our listeners. We've talked about U.S. tech spending on AI, industrial capex confidence from AB, and domestic Japanese market breadth. What are the main themes global investors should be tracking as we move through the rest of this week?
I think there are three key themes. First, global technology capex, particularly around AI, is a significant positive for Japanese exporters and the semiconductor supply chain. That's a structural tailwind that should support the technology and industrials weightings in the Nikkei and TOPIX. Second, we're seeing signs of corporate confidence in capital spending despite political and geopolitical uncertainty, both from ABB's comments and from the breadth we saw in the Japanese market. That's important because it suggests the earnings outlook for Japanese industrials may be stabilizing or even improving. Third, the yen remains weak, sitting above 153 against the dollar, and that continues to benefit exporters but also raises questions about how long the BOJ will tolerate this level, especially with inflation data coming up.
And on the risk side, what should investors be watching?
The main risks are policy-related. Any shift in BOJ rhetoric, particularly if inflation stays elevated, could strengthen the yen quickly and pressure export-heavy stocks. Geopolitical developments, especially around Taiwan and the broader US-China technology competition, matter enormously for Japanese semiconductor and tech names. And finally, if the US equity market rally driven by AI spending expectations starts to fade, that would remove a key support for Japanese equities given the correlation we've seen. But for now, the setup looks reasonably constructive for Japan, particularly in the technology and industrial sectors.